Maybe quick little update on just the equity market and what I see. Um, the usual, just a quick little scan um, and kind of what's happening and why. So obviously, we take out last week's highs. I was relatively bearish, especially with this inside week, considering how easy the move was. The 31st to the 1st, a 3% decline in 24 hours, I guess, give or take. Like 30 hours, like one from high on Thursday to low on Friday. You know what I mean. And then last week, the subsequent kind of weak digestion of this, especially with the Thursday breakdown, the Friday kind of passive seller, but um, it never really gave you, even in a Friday, a really structurally sound like bid, right? Like when you look at the price action from the 622 to 626 in Wong on the 4th, which happens to be the first week of the Vantage Harm flows, we never really have a structurally sound buyer. We never really have a super clean structure on a daily or an hourly perspective. But given the time frame that we enter in terms of the Vantage Harm flows for the month of August and the kind of aggressiveness of this move, one, the VIX pop, two, and the subsequent inside week, right? I'm not necessarily super surprised that we do end up seeing a continuation higher. And once again, there's nothing that really frays me away from the positioning that I like on January exposure. You have to leave room to add, and then the September positioning I still do think works its way out because of the fact that we're seeing like no truly clean bid, right? We're not seeing anything structurally sound, and I think that the reason that this is happening right now is because we have expiration next Wednesday. We have opex this Friday. We have these things that can further catalyze the move to the downside. And before that, when we're in a certain window, it can pin the indexes. And we have the big vol move or VIX move into the first, and then we enter the window of kind of vol compression potentially developing due to these Vantage Harm flows that once we have these expirations relative or expiration and opex, they release a lot of pressure on the indexes, and there's a lot of it can move a little bit more freely once that's the case, right? So I'm not necessarily surprised. We obviously see a pretty ugly print on the Monday session, but nothing insanely notable when you break it down on like an hourly perspective. Very low volume and just waiting. We had CPI on Tuesday as well. And we had faded these highs on Qs. We see the gap up, we see the higher low within the gap, and then the Monday or the Tuesday session is very ugly. Um, it's a gap up off of CPI, a breakdown into that gap, and then a very exhaustive passive seller kind of look that we have, like this kind of like topping out, like this kind of curve. It's very gross in my opinion. I don't know why I can't. Yeah, it's very gross in my opinion. Like the look of this, it's very like no, there's no high or low found. We find a gap up on Wednesday, and then see it like leg stem from that with a pretty exhaustive print. Like when we have this breakout to new highs and then a subsequent like doji candle, I guess you'd call this, like this middle spread, closed right at the open, lower volume. Like that's not really a good look. And then we obviously get kind of the breakdown of PPI numbers today, but we haven't really seen a lot of follow through from those sellers. We see the dip kind of bought up in the Wednesday gap and underneath those lows, and I'm not necessarily super surprised that we're kind of seeing that, right? I would love, in all honesty, a weekly sweep of 637 to 640. It depends on what happens tomorrow. But this is still reminiscent of an exhausted party as far as buyers go. And there's nothing I've seen that really once like phrased me away from my short side conviction in the quarter four and in the quarter one of next year. A gap up and a failure on Wednesday's print, but we have nothing insanely clear quite yet, right? We have to be pretty patient. I've said this before, especially after that aggressive move, the 31st into the first, and then the subsequent window that we enter within the August Van and Charm flows being pretty pivotal. In why we haven't seen that move yet, right? So it's not necessarily surprising. It's not really surprising. We obviously have XLF. I was looking at this gap fill. We had a very distributive hourly look, but we see the break, we see the base at 52.37, and don't really see any follow through after. I will say that a candle with 4 million more volume and half of the move is a little bit weird and unappealing, and the financial sector still does not look that good. You have JPM. Schwab got hit yesterday very heavily. This is a very gross chart on multiple different time frames and potentially is developing a path to least resistance to the full earnings gap fill from July. So that's something I would kind of look out for. Obviously, we've kind of reverted this today, but that was a massive imbalanced print, and I'm keeping my eye on this. There's no opportunity that I'm really looking at quite yet, but it's something that I'm a sector and name that holds a lot of relevance. Visa and MasterCard. MasterCard's within this gap from June where we got hit 10% in just a couple of trading sessions. Visa kind of showing you some preliminary signs of a bid throughout here. I wouldn't be surprised to see this revert into this gap, a lot of relevance behind that gap. But a lot of these just don't look really good. They also don't look good enough short side for me to really want to touch them. So that's kind of the financial sector. I said before, this could take a little bit to develop, similar to how it did in Q1 into March, where we got the subsequent 10% decline, the lower high. It's like an 8%, 10% decline, the lower high, and then 15% decline, 17 in a couple of weeks. So it's not super surprising. We have to be pretty patient with financials. I wouldn't mind a 1, 2, 3 higher high distribution. The progression is already really weak, and if we see a third high faded, it would be pretty appealing, and we could establish, similar to how we did at 50 3/4 in quarter one, establish a floor of accumulation that can be broken down on and then use as kind of a resistance similar to how we did here. And that floor can potentially be this 51.32 spot, where we've now seen 2 weekly attempts to mark this up, and the first initial one met with a stalled high. We break down further into the gap, and we already kind of have very, very weak pop developing off of this. We did have an anomaly on the weekly print. Oh, we actually didn't. I don't know what's up with that, why it was showing that then, but okay, there's that. The MAGS chart, we do break and base the highs from the 31st, but with nothing that's really, really looking appealing. I mean, I just stand by the concept that I'm short side focused, but you have to be very patient with this. I do think that this will reverse. I think it's kind of inevitable. I think something's going to happen. I'm not ever gonna I'm not gonna not ever be wrong. Say I'm wrong. If I'm wrong, I know when I'm wrong, but I still think I'm right. A big factor as well is how good the energy sector looks. Right? We've had the rally on energy from late May, early June into mid June. We had the sector as a whole take a hit on the 23rd, but we've since then been establishing kind of a daily reaccumulation on a lot of these names. Zom being the most appealing, sitting underneath a bear gap, and if you look at the 8-hour, we've kind of potentially started a path of least resistance through this bear gap, give or take 2 to 3 attempts. All of them happening after hours though, so that's pretty relevant. But we've established a floor. We've seen anomaly prints pour in. We have a gap to fill. We're underperforming relative to where we are in comparison to the April 3rd gap. And we're not necessarily seeing any highs sold off, and we are seeing the lows bid up, right? We're not really seeing a seller incrementally sell the highs off, but we are seeing a bidder within this range and the progression kind of stalling at the lows on a daily structure. 28 trading sessions for not even a 0.1% new low is not a good look, right? And then we have the ZOM chart. We're seeing the anomaly pour in. We're seeing the pop on yesterday's session. We've seen 2 attempts at this gap result in a massive capitulation that sparks a clean leg. We find a lower low following the report with the anomaly prints defending a bull gap, defending discount from the April lows to the June 23rd highs. I think this is a phenomenal commons trade where you really have an objective risk of about $2 for a $10 to $11 reward. And I do think an options opportunity sets up here very, very soon. I think you have a lot of these names very compressed and sitting underneath bear gaps that could really move quickly to the full fill. CBX, I mean, we've putting in four going on to 5 inside weeks, closing inside the confines of the print from the July 7th pop. We see a massive, massive footprint on July opex, but we haven't really seen any follow through from that seller quite yet. Oxy, same kind of thing. I mean, we're very, very compressed within these names, and I'm not going to be surprised if we see these move really, really quickly in a rally into these gap fills and then potentially take a hit after that. That would be a little bit of a speculative idea for now, but we'll have to see if we do end up taking out these April lows on these names and fulfilling the October 2022 in log on XLE. But I mean, I'm only long focused ZOM, but you see how kind of coiled this Oxy chart looks sitting underneath the bear gap. BLO is outperforming substantially, so no surprise that it's kind of taking a hit, especially as we pull into some gaps from last year in the lower high territory. But this name doesn't look bad at all right now. I mean, we take out the lows put in late June. We still are kind of holding this progression gap. I just don't really like that as much as ConocoPhillips. We're going on like fucking 10 inside weeks. I mean, that's insanely coiled, and it's happening at on a name that we still have room to run, right? We still have a full gap to fill. From April 3rd, right? So I think the energy sector looks really good. We had 2.9% pop on XLP last week. One second. Um, um, we have XLP. I mean, we're sitting underneath this $83 spot. I don't have any clean structure on this quite yet, but it's a very appealing look and an underperformer that once we kind of develop that change in character, we can maybe get along up to 84, 85. XLK, sweep of the weekly highs, anomaly print, not a good look there. Not a good look on semiconductors. This is building out a distribution 100%, all happening above the July highs. We have, the kind of preliminary signs of exhaustion, a climax put in, a decent appealing little leg, another leg, the kind of fourth daily test of 283, a stall at these highs, kind of a sign of weakness, and then a rally to potentially our UTAD. It all depends on if the path of least resistance through 283 is developed. That's kind of the big time spot for me, but this is a daily distribution 100%, especially with this anomaly print developing. RKK with a lot of volume pouring in on yesterday's candle. I don't know what's up with that, but a lot of these names don't look too good when you look at like growth names. Roku into the peg. XYZ got hit off the report within the gap from November or February. DraftKings earnings report candle didn't look really good. Roblox all-time high failure, and this is a name that, in my opinion, needs some digestion. Tesla, this doesn't look terrible. Like, the weekly look isn't so bad, but we just don't have a daily structure that's super, super appealing. And I don't like when we have 4 gap downs or 4 lows taken out that don't see subsequent clean follow through on an appealing daily structure. It doesn't really signal a weak or strong bid to me personally. And then going into the Mag 7 names, I mean, the top put in on July 23rd that sparked a 6.77% reversal into in 2 trading sessions from high of Thursday to low of Friday. We then get the break, the pop on the 4th, the 2 inside bars, and then we're just developing a continued like stall and exhaustion at these highs at 183. There's no clean buyer here. There's no clean structure here. There's also nothing to really short. I do think we're building out a range, and I still think that this reverts at minimum to 130 by end of year. I mean, which is like a 30% decline. It's a little aggressive. I would like to see something a little bit more appealing to position myself short side, especially on options, but we're building out a range on NVIDIA, and we have been for a while, and I think that if it's not off the report, it could be catalyzed by the report, or we could develop some kind of structure into the report, similar to how we did on the 28th, 27th, and something could happen on NVIDIA. This is not a good looking chart at all. I mean, look at these candles. Look at the lack of any structurally sound buyer. Meta, earnings candle high fade yesterday, and we kind of find a higher low within the overnight gap. I don't have such a clean read on this, besides maybe a path of least resistance through 760. But nothing that I'm very confident on. Meta, besides the fact that I do think that this is a higher time frame distribution with a climax, a UT, and a UTAP. AMD, really ugly looking chart, and we end up fading the highs that we put in on the 31st, where we initially saw that seller on the 29th. We had a lot of volume coming in off open yesterday, and then a subsequent leg following that. And we obviously don't get the closure. I don't mind 190, which is the gap fill from March of 2024. But I still do think that this reverts pretty aggressively. I mean, we absorb the peg, we see the gap up, the continued aggressive volume, and now it's potentially developing is going to be a weekly sweep. And this may even have more volume than, this probably will develop a higher volume candle than the following 2 weeks, where we had the report, where we had the parabolic burst. This is not a good look, and 146 would be the target, but, if you want to take a positioning on September or October's with like a 5 to 6 point risk, depending on where you get your exposure at, targeting the lows taken out of the report, that's not necessarily too bad, personally, because they did bid this report, and we do see that subsequent seller again. We haven't seen any lows taken out, so it makes sense this would be the draw if we see something appealing on a weekly closure. Apple, I still think that this can be a sweep. I still think that this can be a short, but we have nothing yet. We're still in potential lower high range, and when we see that aggressive path of least resistance fake out off the report, rally of 15% in a couple of trading sessions, and then some potential signs of exhaustion, it's not a good look. We have a gap from March. We'll see how this goes on Apple. And then I think Google fills this peg and probably ends up reverting, but we'll have to see how that develops. And Amazon as well. An 8% gap on the report. We'll have to see if this fails this earnings gap as well. And Microsoft looks like shit, but I don't have any edge there. I mean, that's pretty much it. ZOM looks really good on commons. UNH looks really good on commons. We now established the new low with the capitulation. I discussed this kind of subsequent daily character change. We see the pop on Friday. We don't ever get a higher low off 249 to really execute on, but we see the gap up on Monday. The weak seller was kind of getting passively bid throughout the entirety of that session. Into the Tuesday continuation, and then we form an hourly high low, rally into this peg. So I'm not really surprised. I mean, this was actually a pretty good entry on the Monday print if you kind of understand how like the path of least resistance candle can develop. There's a large change in hands here and a really notable bid that subsequently developed a structure that was pretty appealing. But as we rally into this peg, it's not, the risk reward is less optimal. And the potential for this to end up taking out these lows is always there, right? Like a 1, 2, 3 lower low down to this COVID gap fill. Commons focus 100%, right, on a long-term position, and then a good trade here that you can take into the peg. But this trade's kind of over, and I mean, this is only like 18% off the lows. I wouldn't really touch the commons positioning, but I would definitely leave room to add a little bit more because the potential for these lows to be taken out once again and like a 3 lower accumulation to develop is always there. But even if we do trade to like the lower 220s, It's still a 50 to 70% return at your target. For if your entry is kind of 240, 10% risk. PEP was really clean. I mean, really clean. We had the accumulation following the report, the taking out of the 2021 lows, the higher low into the report. We obviously didn't get an opportunity to trade this off of the report. And then we get the capitulation, shakeout, change of hands, inventory collection, whatever you want to call it, into that earnings gap. And we kind of just squeeze after. Phenomenal commons trade, up like 18% from the lows from 127 to 150. We'll see if an options trade sets up. This will continue to be a focus of mine. Other than that, I mean, Palantir is still very, 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 very reminiscent of the February top following that report. So we're going to continue kind of like watch and pay attention to this. But I'm not really a big fan of focusing on this over SPY. You can definitely focus the draw into the peg. This is very exhausted. This is notably kind of seeing a stall. I think the draw in terms of where demand is going to be lying is going to be into that 170 spot. So that's potentially a play. I don't really think it's a focus of mine quite much at the current moment in time, but definitely still a short side focus along with Hood. Put in a 7% or 5% print yesterday, following the exhaustion at new highs above the July opex candle, all following this kind of aggressive parabolic climax at all-time highs. I think this is going to be a distribution that pushes us to 40. And then TSM, the same thing, but there's no structure to really short that. So just a quick little update on SPY short focus. XLF was a short focus, but we didn't get the closure I wanted. And then like the ZOM and UNH commons, and then the UNH potential options execution down within this window, just on a weekly perspective. And then like a PEP. I mean, I really would have liked PEP to offer something on options, but they never really got it. And then the remainder of my short focus is still kind of being there. This looks like shit. I mean, this looks so bad, and it's just that lower high that we put in, digesting that massive imbalanced print from November of last year. So that's pretty much it. I think we are building out a top right now. That's probably going to be the top for the remainder of the year. I know I've been saying that for a little bit, but now more than ever, especially after this clean and easy move where we just slice through like butter, then the subsequent rally off of August flows that is very weak. I think something is brewing. I mean, PPI was really gross today in terms of a macroeconomic perspective, but I think we're going to build out a top here. I think something can offer a shorter term execution next week post expiration and opex. That's my main focus. I mean, I have nothing else that's really appealing to me besides some commons trades on like PepSom and UNH. Everything really looks good short side, but it's just a patience game. Like I've said, this is a longer time frame perspective, and it's obviously taken a little bit longer than I initially expected. But there's nothing really in here that strays me away from that position. So, quick little update.